Another mixed day of trade in the ag market. Soybeans and bean oil led the way to the upside. Wheat was higher, and lean hog futures scored a new contract high on the downside. Corn and bean meal were slightly lower, cotton moderately lower, and sharp losses in live and feeder cattle futures.
Live from How the Sausage is Made via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with Mark Gold from Top Third by StoneX. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. Now, say hello to the host of AgriTalk, Chip Flory.
All right, Davis, man. How you doing today, buddy?
Oh, if I was any better, I'd be Chip Flory. That's how good I am today.
Stop it.
Yes,
Stop
that good.
it.
That good.
Have you started to get any of the rain, or is that still off to the west of you?
No, we have not. And in fact, I feel like the sky is teasing us right now. We've had, for the last 24 hours or so, just ridiculous wind, okay? But the sky is blue for one of the first times today. I don't know what's happening. We're expecting it to hit about 5:30.
If this thing that they call radar with all the pretty colors on it is to be trusted, and I'm not saying the rains are headed your way and are just to the west of you right now. The eastern half of Kansas is picking up some rains right now. Southeast Kansas is kind of missing out on it, but there's some severe thunderstorm warnings that are out there. I think it's stuff that we need to pay attention to because we talked about it this morning, but we do have an elevated risk for severe weather in the Midwest today. There's some severe thunderstorm warnings in far northwest Missouri, southwest Iowa, and now Des Moines. Des Moines in the middle of the state is dealing with a severe thunderstorm warning as well. So heads up out there.
We are dry as a bone here in Kansas City, dude. Yeah. It's really – I think there was dust in the air. There was kind of a brown haze almost this morning that the wind had picked up. I wondered if some of that dust hadn't gotten aloft just from how dry it's been, especially out west of us.
Right. Yeah, it's it has been an unbelievably dry fall. You know what? If you missed it, if you missed the conversation that we had about what that dry fall might mean for us going forward, we had a conversation yesterday afternoon with Sean Hackett from Hackett Financial Advisors. I think you would enjoy that conversation if you missed it. You should go back and take a listen to that again. We got Mark Gold today.
Yeah, Mark Gold. Love Mark Gold.
It's been a while. It has been too long since we've had Mark Gold on here. I'm looking forward to the conversation. All right, man, let's go ahead and get started. What do you got?
Chip, wheat futures ended the session with modest gains. Traders know there will be significant wheat exports from Russia in the year ahead, but many agree Russia's supply of exportable wheat is tightening. That seems to be encouraging buying in wheat futures when prices dip. Monday, December soft red winter wheat futures closed below 560 for the first time since late August. Today, front month SRW futures spiked resistance at 580 before setting back to post a mid-range close. The chance for rain in the U.S. Central and Southern Plains over the next 10 days has put a cap on price gains. December HRW wheat futures today a penny and a half higher, 575 3/4. December SRW wheat up 2 3/4, 573 1/4. December spring wheat closed at 609 even. That's up 2 1/2 cents, Chip.
Yeah, and the rains are starting to develop further south than the area that we talked about, with the rains in eastern Kansas. Down into Oklahoma, not a whole lot down into the wheat country of Texas right now, but Oklahoma, it looks like it's going to pick up some rain here today as well.
Well, Chip, USDA this morning announced the sale of 273,000 metric tons of U.S. corn for delivery to unknown destinations in the current marketing year. That makes 10 out of 11 days with a daily export sales announcement for corn. Ethanol production in the week ended October 25 averaged 1.082 million barrels per day. That's up 1,000 barrels from the previous week and 30,000 barrels ahead of the same week last year. Ethanol stocks were down again and dropped 452,000 barrels to 21.7 million barrels. December corn posted an inside trading day with a high range open and a low range close. December corn futures 2 1/4 cents lower at 4.11 1/2. March corn down 1 1/2 cents to 4.25 1/2. July corn futures closed at 4.38 1/2. That's down a whole half cent, Chip.
And I wonder if this corn market is trying not to spoil a good thing by taking prices up on days when we get an export sale. Price ourselves out of the market as quick as we get the business. I want to talk to Mark about that coming up in the next segment.
That's interesting. Well, USDA this morning also announced the sale of 132,000 metric tons of U.S. beans to China and the sale of 132,000 metric tons to unknown destinations, both for delivery in the current marketing year. December soybean oil opened slightly lower, dipped to test support at yesterday's low, and then rallied to fill Monday's downside price gap. That and the export demand helped bean prices recover from a spike of support at yesterday's low and to post a high-range close. Soybean prices were anchored by a 7th consecutive lower close in front-month soybean meal. January beans today, 12 1/4 cents higher at 9.91 1/4. March beans up 12, 10.05 1/2. July beans closed at 10.33. That's up 11 cents, Chip.
Yeah, bean meal today, December contract down 20 cents was all, 301.60. December bean oil today was up 101 points. 43.81. So a big move to the upside there. We'll get to the livestock before we get to Mark in the next segment because I want to bring in Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
Am I an unknown destination?
You might be. Dude.
So I
see the cattle in the hog markets trading like they did today. Every time I see it with cattle down and hogs higher, I think Bubba's got to be liking this.
I'm loving it, and I don't love it for the farmers and producers. I hope they're hedged up here because obviously these prices they may be once in a lifetime for now. But again, the markets are kind of weak. We're just kind of waiting. Everything I think is waiting. I would say jobs Friday, but that's not it. I think it's the election. I think everybody's waiting to see how this election plays out because the action is still relatively non-existent. Equities have gone nowhere in the last couple of weeks. They're up and down, but basically just solidly stuck in consolidation. I think it's all about the election. I think that'll determine where we're going next.
Do you have an election trade that you've been thinking about, or maybe you've already got on in place?
Well, I think that in the general markets, I think that they've already priced in a Trump victory based on the betting odds and everything else. I think being long grains into the election is the play. I don't think there's much more disappointment that they're going to take, and I don't think there's much room on the downside. Should they go low, I think it's a very high probability risk versus reward. I think there's big upside, 10, 12, 15, 20% to the upside versus 2, 3, 4% to the downside. So I think that's a great opportunity. And I think that, again, depending on how it plays out, I think it works well.
Yeah. The odds on the election, the last I saw, it's like 62% Trump, 38 Harris. Is that what you're seeing?
Trump is almost $1.85 over Harris.
Yeah.
So it's almost 2 to 1.
Gotcha.
So,
Good stuff, buddy. Thanks,
I know
man.
my music's playing. Thanks, guys.
Todd Horwitz, Bubba Trading. Mark Gold next.
On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Welcome back to AgriTalk. Glad that you are with us on this Wednesday afternoon. We're going to get to this conversation with Mark Gold from Top Third by StoneX here in just a moment. But first, Davis, let's go ahead and finish up the news.
Sure thing. I'll hit the cottons quick, where the December contract was 64 points lower on the day to 69.92. Let's go livestocks. Heavyweight, choice, graded boxed beef prices down $1.09 this morning on good movement of 104 loads. The lower beef price as traders expecting lower cash cattle trade this week. December fat cattle are now working on a downside reversal on the weekly chart. December live cattle, $1.52 1/2 cents lower at 186.42 1/2. November feeders, $1.10 lower, $2.45.50. And on the snout side, December lean hog futures opened slightly higher, but on session lows and closed high range after scoring another new contract high. December hogs, $1.55 higher, 84.37 1/2. Chip Flory, over to you.
Yeah, Davis, how long has it been since Bubba has been talking about I want to be long hogs and short cattle?
Yeah,
And he said it even leading right up to this time where typically we would be seeing some seasonal pressure on lean hog prices. Instead, here we are making new contract highs, and the short cattle long hog trade is working for Bubba right now.
Seems
all right,
to be.
thanks, buddy. All right, let's bring in Mark Gold, top third by StoneX. Mark, it has been too long. How are you?
Hey, I'm doing just fine. How about yourself, Chip?
Doing real good, real good. You know what? I just want to start with a general conversation about what's going on in these markets. There is one specific thing that I want to get to right out the gate, though, and that is this corn market. It seems like every time we get an export sales announcement, which has been more often than not here recently, the market has shown some hesitancy to move to the upside. What's the story there? Why?
Well, I think it's a matter of end users are looking to buy corn on the breaks, and speculators with a 2 billion bushel carryout are looking to sell corn on the rallies. And it's the old saying that we've known for years, good exports bring lousy closes. Now, we had, some good exports in the beans today. We had a good close there. But as often as not, good exports generally bring lousy closes. We'll see what the export sales are in the morning, but they're expecting big numbers, 2.6 million metric tons on the corn and 1.9 million metric tons on the beans.
Yeah. You know, one we keep talking about how much trouble we're having moving product down to the Gulf to get it into export location. You look at the export inspections report that we had earlier this week on Monday morning. That was good. At least we are finding a way somehow to move product out of the country, aren't we?
Well, we are. And these rains that are coming across the country right now, it's going to do an awful lot to raise those Mississippi River levels. They've only been able to fill about 2/3 of a barge because of the low water levels. So now they might be able to get back to full capacity and move a little bit more down, which would be certainly good for exports.
Yeah, good for exports and good for basis if we can start loading those barges a little bit heavier there. But speaking of basis, Mark, basis absorbed the harvest of two really big crops and did a really nice job of it, didn't they?
Well, I agree with you there. You know, the thing about basis is over the years, so many farmers think that if they've got a basis contract in place, that they're protected. Well, they're only protected on that basis price. Flat price is still a risk. And if you haven't done anything to protect that flat price, going into the next 30 to 60 days, I think is an issue out here. So you've just got to be cognizant that there is an incredible amount of risk in these markets over the next 60 days. You look at what's happened the last couple of years, we've had some pretty hard breaks in these markets. So just because you have the basis contract on doesn't mean you're done with the marketing.
Yeah, that's a good reminder to people out there that have got, and I would suspect that there is a fair amount of basis contract usage out there this year, isn't there?
Yeah, we've seen quite a bit of it. And, we also saw a lot of this delayed pricing contracts. And, I think it's honestly the worst contract I've ever seen written for the American farmer. I don't know why they ever do a delayed pricing contract. One day we'll have a discussion just about that.
Yeah. Well, yeah. I've always said, Mark, that if there is one marketing tool that we could lose out in the middle of an 80-acre field and never see it again, it would be the DP, the deferred price contract. Why turn over the use of a product, of a crop, of a commodity to the end user and let them use it without paying you for it first and setting the price? You're satisfying demand, and you're removing their incentive to pay up for those supplies. The only thing is, I get it that sometimes it's the only way that guys can get into an elevator and get into commercial storage and move product in off the farm is if they are going to use a DP. So I kind of get it from that perspective.
Well, I think you're better off just selling the flat price if you can get it, deliver it, or do a deferred contract. I think that's a much better way. But, so many times as you talk about the demand, we see prices, $6, $7 corn. Farmers don't want to sell it because they think it's going higher, so they use the DP contracts. So they're giving the elevator the grain when they need it most and not having to pay for it. So you've killed the demand, and now what's likely to happen to price go back down, and the farmer's sitting there with a handful of Commodore instead of some cash money in his hand.
Yeah, no doubt. Okay, so you were talking about that basis contract again, and we cannot forget one of the reasons that you may have used that basis contract is because you would anticipate an increase in price, not in basis, but an increase in price. So you got to set the price at some point. How do you want to do that? Are you just finish it up in the cash market, or keep some flexibility and use the board?
Well, you know what I'm going to say. We've got puts on to protect the downside out here.
Yep.
We've made some really great cash sales along the way. We're about, I think, 50% sold now, and we've got plenty of grain left to sell, but we're not just sitting there with the grain in the bin unprotected. We've got put options underneath it. And even for those guys with basis contracts now, there's a lot of short-term options that don't have a lot of time value built into them that are very affordable. 5-6 cents on corn, 10 cents on beans, that can protect you if this thing falls apart after the election, or if we wind up into a trade war. This can be a major problem out here. So, okay, keep the corn in the bin if you want, but at least have some kind of put underneath to protect the downside. If I'm wrong and corn goes back to $5 or $5.50, great. You'll lose 5 or 6 cents on the put. I think you can live with that.
Yeah. Yep. Okay, you mentioned the election. Let's go ahead and go there. What has the market factored in right now?
Well, if you look at the stock market, if you look at the Trump media stock, it's gone from $12 to $48 a share today, I think it was. That's a quadrupling in just 5-6 weeks. That's telling you Trump's going to win. If you look at the odds makers in Vegas, they've got him at a 63% chance of winning. So the odds makers like it. The betting websites have got him as the favorite out here. So it's going to be a surprise if she wins. If she does win, the legal battles will just begin, and they will be never ending, and we'll see where that goes. But certainly the odds favor former President Trump in this, and we'll see what happens. But, that's not necessarily good for the American farmer. If he comes through and puts these heavy tariffs on the Chinese, we've been through this before. Prices took a big hit. And again, having those puts on, I think, is a good play before the election.
Okay. Get some puts on in front of the election. It does feel like if he is going to take on China again in the trade arena, it does feel like he's got to start from scratch. Even though we've been through all of this before, Mark, I think he's willing to start from scratch. Is that kind of what you're feeling?
Well, I see where you're coming from, and I don't necessarily disagree with that. But we keep hearing his statements saying, we're going to immediately put these heavy tariffs on the Chinese. We're going to stop what's been going on. And, personally, I agree with the president that China has to be dealt with. In my opinion, are tariffs the best way to do it? I'd rather see some other things, but we'll see where that goes.
Okay. All right. Well, we are going to continue this conversation with Mark Gold from Top Third by StoneX Group. What's happening in the markets on a daily basis? What's happening with the speculators in the market, the fun money? We're going to talk a little bit more about that with Mark coming up next here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where December hard red winter wheat futures were a penny and a half higher at 5.75 3/4. December soft red wheat up 2 3/4 cents at 5.73 1/4. December corn futures 2 1/4 cents lower at 4.11 1/2. March corn down 1 1/2 cents to 4.25 1/2. January soybean futures 12 1/4 cents higher, 9.91 1/4. March beans up 12 cents, 10.05 1/2. December cotton today 64 points lower at 69.92. On your livestocks, December fat cattle were $1.52 1/2 lower at 186.42 1/2. November feeder futures a $1.10 lower, 245.50. And December lean hogs $1.55 higher at 84.37 1/2. Get more. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory.
We are in the middle of a conversation with Mark Gold, top third by StoneX Group, here on AgriTalk. Welcome back. I'm Chip. Mark, talk to me about the structure of the markets, the structure of the bean market, the November at 976, January 991, March at 1005, 1021, 1033, out to the July. And we've got a carry, although some of that carry has disappeared in the corn market. What do you make of that structure? How do you want to use it?
Well, for farmers that have been sticking grain in the bin, hoping for higher prices, we're all about capturing the carry. And there's been good carry in the market, both in corn and beans. Like you said, the corn's come down a little bit. But when you look at a carry from November at 976 out to July, it closed today at 1034. That's a big carry. So go ahead and stick the grain in the bin, capture the carry. If you want upside protection, buy some call options. But, I'm a big proponent. One of the only reasons there are a few reasons you should be storing grain, but one of them is to capture the carry. And the market is paying you to hold off delivering this grain. We know how backed up the elevators are. So go ahead, stick the grain in the bin, but sell those deferreds, capture the carry, use some of that money, and buy some call options to keep the upside open.
Okay. How do you want to capture that carry? Are you just looking at a forward cash contract for July delivery? Or are you looking at putting a hedge on?
Yeah. No, I think, you look at that price and you actually, either do the hedge or you do it at the elevator with a cash contract on a deferred basis and, just get it captured. They always talk about capturing the carry and there's carry in the market, but I've seen over the years too many farmers stick it in the bin and say, well, there's carry in the market. Yeah. Well, if you don't capture that carry by selling the deferred, it generally bleeds out of the market. So in my opinion, you got to be capturing that carry if you're going to store it.
Yeah. Yep. And then I think I heard you say there that if you think that you might be doing this, in a market that's still got some upside potential, you can just own a call option against that forward cash contract sale, right?
Absolutely. There's two ways to play the game. Stick it in the bin and have some puts underneath you to protect you, or capture the carry and look to buy some call options. Those are your two choices.
Yeah. Yep. I love it. So the other thing that we got to figure out then is how aggressive do you get on 2024 crops? How aggressively do you want to be sold?
Well, we like selling grain during the year. We used this last rally that we had, 4 or 5 weeks ago to advance more sales. I've been saying for quite a while, if corn and beans on the funds, if they came out of, a good amount of their grain and the American farmer had sold a lot of the stocks that were in there from last year, that we could see a rally in the market. Well, the stocks in all positions came out, and we saw that farmers have done a good job of selling that grain that had been in the bin. We saw the funds get close to getting, even in the beans and even in the corn. They were short 23,000 contracts of corn at 1.17 thousand beans. So they had come out of those massive short positions for all intents and purposes. And that's the time to make some sales. The market had rallied. You reward the market. And, we've been looking for these opportunities to sell cash when we can.
All right. Okay. Talk to me about the November bean contract and, as it stands. How much influence is that going to have on how this market trades going forward?
Well, we've got to see what the deliveries are. Tomorrow's first notice day. I thought we were going to be down again. We were down hard yesterday, and I think that was because of long liquidation. It certainly showed up in the open interest. And I was really surprised to see it come back 11 cents here. But when the bean oil is up, a full penny, you're not going to expect the beans to be lower unless they tank the meal. But I was a bit surprised at that. I don't know where they think they're going with those November positions into first notice day tomorrow. But I would expect to see some pretty heavy deliveries.
Okay. So, well, you've brought up a couple of old sayings from the floor days, Mark. I'll bring up another one. Do you buy a big delivery in this market?
Well, that's the old saying: buy heavy deliveries on first notice day. And if we see them, beans are cheap out here. 980 beans, 979 beans, whatever we are right now. Relatively speaking, they're pretty cheap when you've been to $17 and higher. Do I want to do it before the election? Yeah, I would take a shot for 2 or 3 days to see if we don't get a bounce.
Okay.
Would I protect it with a put option going into the election? I would, because I'm just fearful of what can happen. There's going to be a lot of nervous people on Tuesday at 7:00 at night trying to figure out who's won this thing.
Yeah.
So, confusion, is not necessarily a good thing for the grain markets. And, there are so many other moving parts. The Chinese, we know they're buying an awful lot of beans out of Brazil right now. We're getting a little bit of the business, but it's a drop in the bucket to what they're doing with Brazil. There's so many moving parts to this thing. What's the oil going to do? Are the Israelis going to now take out some of the nuclear facilities in Iran and take out their oil fields now that they've taken out the missile defenses? I don't know. If they do, crude oil is going to $80 or $90 a barrel, and that won't hurt the beans at all. So we've got a lot of divergent parts in this market, and to some extent, it's a flip of the coin.
Yeah. Yep. And if Trump has his way and he drills and fracks, I think his goal is $40 crude, not $70 crude, isn't it?
I would certainly think so. I mean, President Putin may have his objections to that, but I think for the American economy, it would be great. I just think that the oil market in the next month or so can be incredibly volatile, as we've seen, and I don't see it getting any better because we don't see anything out of Netanyahu saying that they're done. So, if they go in and take out a nuclear site or the oil wells, crude goes to $90 a barrel, in my opinion.
Right. Okay. All right. Mark, I want to end up getting your thoughts on what farmers should be thinking about as they're preparing for what looks to be kind of a rough slide on the financial side of things. But first, you made me think of something else. We were talking about some of the old rules, like buy big deliveries on first notice day, stuff like that. Do those old rules work like they used to?
I really don't believe so. I mean, there's certain things, you've heard me say over the years, so the Jewish New Year, buy it back on the Jewish Day of Atonement, that 10-day, and it worked again this year. That's one of the things that seems to have held up. But a lot of these other things and a lot of the chart formations, I don't think with these funds and these algorithmic traders that they hold up nearly as well as they used to. But
Right.
supply and demand still controls this market.
Yep. There you go. There you go. Okay. Interesting. All right. So financially, a tough slide here for agriculture, for farming. What do you want guys thinking about as they prepare a marketing strategy?
Well, on 2024, if you've got the crops in the bin unprotected, you really need to do something. And my suggestion, as we've said 3 times already, either sell the deferreds and capture the carry and buy a call, or at least have some puts on to protect you through the election, the next 30 days of the Middle East. That makes a lot of sense to me. As far as 2025, we stuck our toe in the water with a couple of sales, but I never like to get too far ahead. With so much ahead of us, what's the Brazilian crop going to do? Yeah, they've had great rains, but can they get through a hot, dry spell come January, February, March that can do a lot of damage? If the forecasters are right, they can. So, I don't want to get too hung up and too sold too early, particularly at these relatively low prices.
Okay. All right. And I would imagine another step is, even if you have taken all kinds of measures to cut your production costs in the past, you need to get your costs down even more for going forward, right?
Well, certainly costs are going to be a big issue out here.
Yeah.
Our fertilizer price is going to come down. Our seed price is going to come down. Fertilizer, maybe a little bit. Seed, probably not. I just look at these costs. Everything with this inflation has gotten so bad. You've got interest rates up here. The less money you have to borrow, the better off you're going to be with still 7-8% interest rates at the bank. So I think you've got to be very conscious of what your costs are. Do the best you can there, and then look to sell rallies in these grain markets as long as we've got these big carryouts out there.
Yeah. Yep. Mark, it was so good to talk with you again. Thank you for making time for us, man. We sure appreciate it.
I'm here anytime you want me. I'm around. I appreciate
Excellent.
the opportunity. Thanks, Chip.
Glad you were here. Glad you're here, man. Mark Gold, top third by StoneX Group. The markets are. Mark just said, look at the markets, listen to what they're telling you, and take advantage of it. That's the bottom line.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind. Not much time. Tick-tock, tick-tock. I got something here. Your pal, Davis Michelson. So glad you've tuned into AgriTalk with Chip Flory and me, the handsome newsman. Wednesday afternoon. Chip, yesterday was a big day, and we were so engrossed in conversation in the fourth segment, I didn't get a chance to bring it up. I made it to the very last page of another one of my notebooks. Beloved listeners, you may or may not know this. If you're new, you might not know, but as the conversations unfold on the radio, I'm sitting here with composition notebooks, diligently taking notes, so that when we get to this part of the show, I don't just go, pumpkin spice is really good. You know what I mean? You want to have something to talk about. What's fun is, now we get the chance to go all the way back to June 3rd, 2024, and figure out what we were talking about. I'm just going to bullet point these because I have a question for you, Chip, that I want answered. I demand answers. Well, not demand. That's a little harsh. We started June the 3rd with Machinery Pete in the morning program, then Brett Kaysen. Okay. The afternoon show, I just want to read these because I kind of do these in bullet point style and I'm taking notes. We had Matthew Elliott from South Dakota State University Extension. This is Jackrabbits, right? The South Dakota State University Jackrabbits, I think?
Yes.
Weather's been good in South Dakota. Good early progress on pace from here on out. Here we go. The hope, that's in quotes for some reason, the hope of 45Z is that it opens the SAF market to U.S. corn for ethanol. 40B will lead the way to 45Z.
Oh, my gosh. We've talked about 45Z for the
since.
last 10 shows.
Yeah.
We're still talking about it.
Yeah.
How many times do you have to bang the gong to get the message out there that, come on, we need these details? I've said this one before. I'll say it again right now. We need the details of 45Z on September 1. Yes, I know. It's almost November 1. But we need them on September 1, not January 1. Oh, good grief, dude. We're still waiting.
I didn't mean to get you all fired up. But, yes, this goes back to June 3rd once again. Just 3 more here, and I love the last one. Wheat is not a leader corn/beans can trust. We've been looking for a breakthrough in wheat that maybe corn at least would latch onto. But back then we were thinking it was the leader that you couldn't trust. You got to take a long-term view on the carbon pipeline, we said that day. And Matthew Elliott from SDSU Extension, the last thing I have written down from him, be disciplined, stick with the plan.
Yeah.
Always great advice.
Well, so on December 20, on June 3rd, Deese corn closed at 462 3/4, and that was off a high that was posted on May 28th. So just a few days before that, the high that was posted at 493 fell 30 cents.
Wow.
Like in no time. Okay. Kind of consolidated there around that 460 level, bounced up to back up to close to 480 in the middle of June, and basically ever since then it has been a slow slide. Wow.
Yeah.
A lot has happened in the last 6 months.
June 3rd to
months?
October
That's
29,
6 months.
2024.
That's like 4 months.
I'm keeping these.
Yeah. Really cool.
Mark Gold. Great to hear from Mark Gold again. Top Third and StoneX. He made me think, and we've been talking about this one for like the last 10 days straight too. But I have a question. Does former President Trump, I'm sure he's been told, has he processed, does he understand that ag is freaked out by his suggested tariff policy? Does he know the farmers are freaked out by that?
Yeah, I don't know. I don't know the answer to that.
Yeah.
I do know from some of my farming friends that have had the opportunity to weigh in on policy, weigh in on concerns at a high level. They have indicated that they've talked about, the tariffs are a bit scary. The use of small the allowing an EPA that allowed for the small refinery exemptions is a bit scary. You say that we are going to end all of that when it comes to the Inflation Reduction Act. We're going to end all of that when it comes to climate smart and energy policy and so on. That's a little concerning for the biofuels guys that are making some progress there. It's and then I'm going to throw this in there because I continue to get emails about the potential that RFK is going to have a high-level position in the Trump administration and may have influence over what happens at USDA. Now, on the other side of that, the Harris basket of concerns is just as heavy.
Sure.
And
to be fair,
it carries other issues in that basket. It's just here we go, huh? we're
Well, yeah,
into
'cause
the
here's the
home
thing.
stretch to get the. Yeah, go ahead.
I think I'm not a bunch different from farmers. I'm willing to bite the bullet if I know that it's understood. You know, whoever's asking me to bite the bullet knows what they're asking me to do and has me covered, maybe on the back end somehow. That's a lot easier for me.
Yeah.
Maybe I'm alone.
No, you're not.
Yeah.
You're not.
No.
It's, you know what? That's a good question. I'll dig into that here a little bit between now and tomorrow, and we'll see what I can turn up. National Weather Service 6 to 10 day outlook, November 5th through the 9th. Above normal temperatures expected over the Corn Belt, including far eastern Nebraska, far eastern Kansas, far eastern Oklahoma, and points to the east of that. Above normal precipitation expected in the southern 2/3 of the Corn Belt, northern South Dakota, North Dakota, and Minnesota. Most of Minnesota are looking at near normal conditions. Thanks so much for joining us today. 10:06 tomorrow morning. Be here.